So, should we buy or sell the Belgium stock market ETF? First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So we can find Belgium in Middle Europe. We see that there's a 7% move from the 52-week low, and we are 19% away from the highs. So here is, the long-term big picture chart for Belgium. One of the things here that we see is that there are time cycles, but the duration has, differed over time. But it basically is one of those securities that move in big uptrends and downtrends. So it's very flexible, for the long-short investor. The key indicator to focus on in this video is this red 200-week moving average. So you can see that during this sell-off, it was a pretty solid resistance level. You can see it there, a solid resistance, but when it becomes, support, then we see a very substantial rally, protracted rally. Here, before this massive collapse, we tested it for support, got some bounce, but then failed at other key moving averages, major sell-off. Here, during this downtrend, let me just draw it in to make it super clear. So it's pretty obvious that this is a very big deal level. The 200-week moving average, it is sort of like the arbiter of whether we are in a major uptrend or downtrend. When that moving average becomes a support, then the bears step out of the picture and we see the bulls move up big. So basically here as well, in 2018 and 2019, it's a very big deal level. And this key, super important and very tradable moving average is currently in play. The problem now is that it is a resistance level. Hence, given the track record of this moving average, the bears are using it to add to their short positions. So yeah, that's my basic assumption here. As long as we are below this super important moving average and it is resistance, then for all intents and purposes, the bear trend is still in play. Looking at the daily data points here, we see that we are below many of the longer term key moving averages. And we see that there's a massive rounding top pattern in play. When we look at these other indicators, looking at the MACD, RSI, and the PPOs, we are in the lower end of the range, but it's a messy place. It's not a place currently where it's really dangerous for the bears either, because that is the key thing when looking at these indicators is who is going to make the biggest decision based on it. Will we see the bulls or the bears be emboldened? And these indicators, even though we are in the low end of the range, it's not at levels that scares the bears. Looking here at the daily data points, you can see here on RSI, you could certainly say that we have lower highs on RSI, which show us that the bulls, they really struggle to attract momentum. So let's go to the laboratory. So here is Belgium. The key event is that we have 200 VMA resistance. That's the key thing at the moment. So in terms of giving the technicals a rating, I think I will give it -5. This is a very long-term moving average with a lot of history. And getting below it was bad in the past. And as long as we are below it, then the bearish thesis is in play. So here is the seasonality. So to the right, we have the average data here in green over the last 5 years. We see that overall, it's basically bearish leading up until later July. In blue here over the last 7 years, we do see that there's a decline leading into early July here. In red over the last 10 years, you do see that overall, there is a bearish momentum that peaks around late July. So to the left here, we do see that June is one of the weakest months, but July is strong. Looking at the last 10 years, then we do see that June, the current month, it is the weakest of all months. But July, interestingly, is strong, but it is followed by a mediocre August and September. Then the last 20 years, we do see that June is the weakest of all months, which means that it is favorable, obviously, to the bears. July, here again, it is a bit of a strongish month, but August is mediocre. So given that, the weakest month is the current month, then obviously that is favorable to the bears. The problem for the bears is that July is strong-ish. So I will sort of adjust the score, but I do think I will give the bears a 4 here. This is pretty good for them. Let's now look at the fundamentals. So we are comparing the Belgium ETF, EWK, with the VGK, which is the broader Europe ETF. Huge difference in expense ratio. So yeah, being very specific here, going to Belgium is, yeah. But Vanguard is, known for having low expense ratios. That's sort of their thing. But iShares, they have a different attitude, but 0.50% is not like extreme either. Like in the mutual funds fund business, then it's way higher. So yeah. Let's go here to performance. Looking at year to date, very similar, minus 11.5 versus minus 11.8. Very similar. Beta, slightly higher beta here for Belgium. Looking at the dividend yield, around 2% for Belgium and 3% for broader Europe. So yeah, that is favorable to those who, of course, like dividends. PE is 19 for Belgium and 17 for broader Europe. So already I can see, that, those who are into fundamentals are more likely to just pick VGK instead of the Belgium ETF. Here you can see the top companies. Here you can see the sector breakdown. Finance, health tech, and consumer non-durables is pretty big here for VGK. And also here, frankly, for Belgium, but there's more diversification here, as you can see in the VGK. So, there's sort of more risk in the EWK. So those who are into the fundamentals, they are more likely to look negatively on what we saw here, because, that's the kind of mentality they have. They like to get some yield. They look at price earnings. They also look at sector risk. So yeah, minus 3 here. Here are some correlations. Long term, we have 80% with the S&P 500, 97% with the Europe ETF, then 57% with the euro, the currency index. And then we have 43% here with natural gas. Yeah, I look at natural gas because it's been such a huge topic as of late. Looking at daily data points, this is shorter term correlations. Yeah, 89% with S&P 500, 97% with Europe ETF, 49% positive here with the euro currency, reflected through the index, and minus 60% here with natural gas. So you can see here that, there is a very sharply negative correlation here. And it goes to show you that rising prices on natural gas, the futures, is generally speaking rather negative for the Belgium stock market ETF. That is what this minus 60% means. But anyway, the strongest correlation we do get here is actually with the VGK, the Europe ETF. So what happens with the Europe ETF is very likely going to affect the Belgium ETF. So we start here with weekly data points. So we have, a rounding top pattern here on the VGK as well. we have a resistance level here, in this case, in form of this pinkish 10-week moving average. Let's look at the daily data points. Yeah, here we got another, which a bit more known moving average, and that is the green 50-day moving average. So let me just draw it in. So you can see resistance, 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 and the bears are pushing us below that resistance level again. So it is like a level that the bears just come back to and short, this ETF. And as long as they can make money doing that, they will have, sizable positions. And those positions, they add downward pressure. In order to sort of break this spell, we need to have a strong move above, the 50-day moving average, because that will make, the bears close out, some of their positions. And, that is how you get much, better odds for bullish trade ideas. So here is the relationship between the Belgium ETF and the Europe ETF. So you do see that, overall, since October 2016, Belgium has been underperforming the Europe ETF systematically. There is some initial signs here that we potentially are forming a bit of a floor. You could argue that we have some horizontal support here, here, here. So that is potentially interesting, but it's still very early, obviously. You also could make the case that this looks like something that could evolve into a rounding bottom. So that is something to have on our radar. Looking at RSI here, it's in a very noisy place, basically. Okay, so let's go here to the seasonality. So in green here, over the last 5 years, it's a bit up and down. So it's a bit messy, basically. Not like a very clear tradable trend. In blue, over the last 7 years, however, we do see that Belgium has a tendency to outperform the Europe ETF here all the way up until early October. In red here, over the last 10 years, generally speaking, Belgium tends to outperform the VGK, but it's a bit more noisy, as you can see. It's a bit up and down. Here I am comparing the Europe ETF with the S&P 500. So basically Europe versus America. Yeah, ever since October 2007, Europe has been making lower highs and lower lows versus the S&P 500. So very protracted downtrend. In terms of RSI, we are approaching a territory that has been favorable for shorts, but not like screaming. If we zoom in a bit here, the downtrend is just still very much in play. Let me just draw it in because you see here that this high is meaningfully below this one. So we have a lower high, which basically is the definition of a downtrend. So let's look at seasonality here. So you can see here in red over the last 10 years, yeah, pretty bearish going forward. In blue here over the last 7 years, pretty bearish. Green over the last 5 years, also basically rather bearish for Europe. So I do think I will give the bears a 3 on this one as well. Well, actually, I think I will upgrade it to a 4. So we end up with the average score here of 4 in favor of the bears. So the data is more favorable of bearish trade ideas than bullish. The key part of the bearish thesis is 200 weekly moving average resistance. As long as we are below that very important moving average, then we will simply have a situation where bears will build bigger positions than bulls, And those who are bullish are going to feel more uncomfortable and more likely to sell. And when you get more sellers than buyers, then any security will go down. I would recommend that you subscribe also to these channels here with these names. So you can find the links down here in the footer. That is where I will publish reviews of trade ideas that I have published on various social media platforms. And it is 100% free. The key reason why I publish it is that I am actively working to hone the method. The method for selecting interesting opportunities and also for managing them. If you have any ideas about various theses that I publish, meaning videos that I publish, then feel free to comment. But ideally, comment relatively early after publication, because if you have some ingenious commentary half a year after I publish a video, where you have some explanation for why a security moved in a certain direction, then that is not the same thing as publishing a comment on one of the newer videos. But I strongly recommend you just to do that, because it's a great way for you also to just get better at analyzing securities and making a bit of a call on what you think the future direction will be. And that is what I'm doing here. The reason why I make these videos is because it is of course informative for other people, but what it also happens is that I get way better at trading the markets, because all of the videos I publish are videos where I either will be right or I will be wrong. It is completely like binary. There's no cop out.